How are we doing today, sir?
Spencer, how are you, man? How's everything?
Hanging in there. It's been a weird week.
It's been an interesting one, that's for sure.
Went from neutral to pretty bearish to I don't know. So no, I really don't know. So I don't know about you.
The Fed has not helped at all this week. These 2 days of meetings, testimony, and then yesterday with Facebook and Twitter, and none of that was positive to the market. How about that? Nothing giving clear direction.
Yeah. Maybe you can share your screen and let's just start. This is an options focus show. We've got half hour or so. Let's talk some options. What was on your radar this week on the options front?
So let me grab the right screen. Got 6 of them, and it becomes interesting to capture the right one.
Yeah.
There we go.
TradeStation.
Yeah, I'm a big TradeStation fan.
All right, guys. For Robert. Let's go. Tell us what you got.
All right. So S&P 500, we look at, actually, let's start off with a daily chart on the S&P, all right? We'll go there first. Really helps explain everything that's happening and or not of what's going on here. So as you said, Spencer, we're up, we're down, we're up, we're down. We're all over the place. Yesterday, we pulled back. Good gap today. We got above the 8 moving average. We got a good push up. A great SPY trade set off today from this right here off of this on the 5-minute intraday chart. But when you look through the week, we were up, down, down, up, up. There's no consistency. We're almost getting back to here where we're up a day, down for 2, up 1, down 3, up 1, down 1, up, down, up, down. It's too much inconsistency. When you're looking at directional trades, the stop outs are happening way too often because of how quickly and or viciously the market's moving. So most of what we've done that we have been trading recently is more day trades than they are swing trades, other than if we're doing some of our selling strategies where we're going out there and trying to pick up cash, which we talked a lot about last week, of renting out your stock and selling naked puts and things like that. For me this week, everything that we've been focused on has been very short-term day trades for the most part. There's only one swing trade that I am in right now, which is Roku, R-O-K-U. We called this one out on right here. I purposely drew the arrow there so I would get the right date. We called it out right here. We had a nice bearish bias. Bias for me comes in the relationship of moving averages. I've got an 8, a 21, and a 55. And some of you are scratching your head saying, but who in the heck uses those numbers? Well, they're Fibonacci numbers. They are very accurate. I've tested over 4.5 million days of moving average crosses, and 8 and 21 are the best numbers that I have been able to find when we did our test a few years ago, but when we did our test. So we got a nice push back up and a fail. Once we got the fail off of here, we were able to, actually the trade was here on the 23rd. I just want to put the arrow there. Once we got the fail off that moving average level, we were able to take a directional trade. So this came in on the 23rd, which was Tuesday. So we picked up just a handful of contracts, just 4. And our first scale out was at this level right here, which came in at that 123.5 is where we scaled out. We took one more contract off today when we got down to the 300 level. So about 301, 301.5, I think is where we were out of that second exit today. We've got one contract left on this trade right now. Roku has, if you look bigger picture further back, let me just reset my keyboard here. If we go back and look a little bit further, let's bring it in a little bit. Okay, there we go. So if we go back and look a little further back, you can see Roku's had an amazing run. And this pullback is well-deserved. We've got a lot of these COVID stocks, the Rokus of the world, the Zooms of the world, all of these stocks that took off and had major growth in their companies because more people staying home, more people trying to get out and trying to do some of that. You're seeing some of the reactions take place now, Roku being one of them that is getting a little bit of the smack. And on the other side, what do we see in the upward direction? Hotels, casinos, cruise lines, airlines, things like that. The COVID recovery stocks now are kicking in play. So we took advantage of that trade, but we did it at what we call aggressive, which was only taking 4 contracts, meaning we want to take the trade, but we're not willing to put a large amount into it on Roku. And it's worked out extremely well for us so far this week. One contract easily managed. We use the 5 moving average, which is this blue line right here. If we get a close above the 5, we're out of the trade automatically. And what we're looking at here is the last contract. It's a runner. We've got whatever it is from 356, let's call it, down to 300. We've got $56 move so far in 4 days. We could have a $100 move more on the rest of this trade on the last contract, easily see a tremendous pullback in there, and we want to be able to capitalize on it. So because of that, we're willing to give a little wiggle room, meaning we'll give some back on the last contract. But there are trades that we've done that we have been able to lock in more profit on the last one contract, and then the first 9 we were able to take in. And that's because we had it as a runner. We very much use clear and concise entries and targets. We're looking for very specific rules when we go and enter and or exit out of the system, right? Let's see. All right, just making sure we're not missing anything on the chat there. Okay. So Roku, tremendous one, tremendous. Oh, by the way, Jason had asked me, they had me come in on Monday to Tuesday. They asked me to come in, I think it was on Tuesday, and talk a little about options on the Power Hour show. And he had asked me, the students kept pushing, in the chat, they kept pushing, what's your favorite stock with covered calls? What's your favorite stock under $40 that you do? Remind me at the end today. We finish up at 2:30 today. Next week, we'll go for a full hour. We'll start with the full hour as of next week. But remind me at the end of the show today, and I will share with you my favorite stock to rent out, my favorite stock for covered calls that's under $40. I will share that with you today before we finish up. All right, so let's keep rocking here. So if we look, what else is going on here, right? You've got a lot of stocks that have great potential to them. We need certain setups to happen first, but let's look at what we did today, and we'll go from there. So SPY was a day trade that we took today. We had a nice gap up. Makes it hard for me with my system to take that gap and try to trust in that run because I'm expecting some pullback at some point. So if we look for today, just to get an idea of where we were, this was our gap today, right? We started at this bottom line right here, which is where we closed, and we gapped and opened right up here at this point. We had a pullback today of only about 23% intraday, this morning. So I like to see 50%. We didn't get there. One more line. But overall, we had a nice pullback. And that's where my concern is of trying to take that day trade after the big gap up. So what do? We waited for the stock to make a move back above the moving average, retest it, and bounce. So it made a move up. It came back to the moving average. It got back above the 8, the pink line, and that was the entry right in there. And sorry about that. As we made the continuation move up, we pushed up. We had a high. We came back down. We closed below the 8. We pushed up again. We got another high. We came back down. We came up again. This time we could not get the closing price up there. We're starting to see more wicks forming. Once we got the close below that 8, we were out of that trade. So that was, let's call it 392.5 from about 391.25. So we got $1.50 out of that with an option. You're easily going to pick up about 70 to 85 cents on that position. And with options on the SPY on expiration Fridays, they're very, very, very low cost in there. Very low cost. All right. So give me a symbol that you guys want to take a look at as far as a stock. And let's see if we can't pull it up and analyze it from start to finish, soup to nuts. Go ahead and drop one in the comments.
Here's one from chat, and this one's been a high flyer, or no, a low flyer today. Viacom.
Is that VIA?
VIAC. They changed their ticker again.
Because it was B, correct?
It was VIA, it was VIAB, then they merged again with CBS. Now it's VIAC.
Okay. So, goodness gracious. All right. These guys talked about on Reddit?
No. There's a big block trade today. They did an offering. First off, you can see that they went up, but then they did an offering that was the top, and then there was a big block trade today.
Yeah, I mean, what do you do with this stuff? I mean, you saw the move it happened yesterday, 2 days ago, right? You had this already big move down, another one pulling back in there. For me, these are the trades I tell traders to stay away from. All right, let me say it this way. So Spencer, if you could tell me that you were willing to go up to the top of a mountain and you wanted to put $500 in this trade, let's say, and you're willing to take $500 in $20 bills in your fingertips and let it go and you'd be okay with it, then I would say put $500 in the trade.
Okay.
But to me, the speculation, do you really want to go and fight these big guys that are out there controlling the market with these whipsaw type moves? I am looking for very clear and concise entries. I look for them. Guys, if you look at the left side of my screen, that is my primary watch list. Those 20 candidates plus the S&P and the VIX, those 20 candidates are what I trade day in and day out. And you can make a living on one of them. Just one. You don't need all of them. You could get really good at one of those candidates. As an example, every one of you should be considering SPY as a trade. Right? Now, are there ones that don't move as well as others at times? Sure. Like Home Depot, they don't ever move, do they? Oh, wait a second. Yeah, they did. Right? You are going to have some times where there's periods of flat, but you can get some enormous moves taking place in there. So I am not when it comes to the moves like that, I am not the trader to try to take advantage of that play. Here's a great one. GameStop, right? How many of you are trading GameStop, right?
I'm guilty.
How'd you do with it, Spencer?
Don't emulate me.
Sorry?
No, I know. I bought it kind of as a joke the day before the hearing, and then thinking it was going to go up, and then it did, but I didn't sell, so it's the whole thing.
So for me, I've been trading GameStop since about the first week of February or so. And I do an option strategy where it's called selling a naked put. All right. And that option, that naked put, what I'm actually doing in there is I'm collecting a premium. Somebody is paying me to place the trade. They're handing me cash. Now I'm taking on an obligation, but I'm only taking it on for a week. Let's see, we need a few more strikes in here, a few more options. So this option right here, the $40 option last week. Right now, this expires, actually, it's for this week. This $40 option right now has a bid and ask by a penny. So it's at parity. There's no spread at all on the options. They're just trying to close positions out, is all it is, right? This position, the $40 position last week was 40 cents-ish, 38 cents, something like that. We sold that position. They paid us 38 cents a share. 10 contracts would have been $380. And you could have gone out of it today and just given a penny back, and the trade is over and it's done. Instead, there are traders out there right now that are trying to buy GameStop in this or sell or plan their entries and exits, and it's a whipsaw. If you're fortunate enough, right place, right time, beautiful, to catch the moves here, that's a great thing, right? But when you look at how much it snaps, and then, of course, it had its earnings there, pull back, and then who expected the big gap up, the big run up on the earnings? I didn't. I mean, listen, this was a horrible company before Reddit started talking about it. There was massive shorting taking place on this stock, more than there were enough shares, which is what caused all of this debacle. So keeping it up there there's nothing really holding it up. Someone's going to wake up one day and go, wait a second, enough is enough. Let's go ahead and pull our shares out of there. It's great for the company. They've got all the extra cash to work with right now, but when you look at this, could you sell an option on this to collect premium? Absolutely. See, options are not. When I first started trading in 1997, my wife and I were sitting in a mall one day. We're at a food court. I remember this like it was yesterday. And I said to her, honey, I found an option today that was only 20 cents. She said, what does that mean? I said, the worst thing that can happen to me is I would lose $200. That's the worst that could happen. Take a wild guess what happened. We lost $200. Go figure. Why? It was the wrong option. I bought it for cheap. There's plenty of cheap options you could buy, but we want to trade options with a structure, not by just saying, ooh, let me go ahead and guess at what we're going to do here. So if you wanted to trade Apple today, and you thought Apple were going up, and you were only going to be in it for the day, right? Here we are at the end of the day. There's less than 2 hours left in the market. And I would be, if I traded this option right here, which would be the right one to trade, by the way, I traded this option and it would cost me $1.43 per share. Options are in 100 share contracts. So I would have $140 now $6 in that trade. That would be my maximum risk. And if I could just get Apple to move a very small amount, I could pick up 20, 30 cents on this option. And this question came up last week. Jason had repeated it from a student earlier in the week, when I was on the show on Tuesday, of why would you take such a small amount of cash in the trade? It's not about the dollar amount that you make. You're making a mistake if you look at the dollar amount. Why not focus on the rate of return? Think about it. If I can make 10 cents and I only need $1 to do so, I made 10% on that money. Yeah, but it's only 10 cents. Do more of it. If you're going to buy a stock for $4,000, put $4,000 in that at 10 cents per 100 shares. So if you need $100 to make 10 cents, if you had $1,000, you'd make $1. If you had $4,000, you'd make $4, right, per share. So, and if you have 100 shares and you made $400, you're still at 10%. Look at the rate of return. Don't focus on what you're bringing in cash flow. Here's the thing. When it comes to, depending on the type of option trade you want to do, if I'm selling options and I sell a bunch today, right, on my covered positions, my covered call type positions, my naked puts that I sell, right? When you look at selling options and covered calls, on a covered call, my goal is to make 3 to 5% a month. That's it. That means on average, 0.75% to 1% a week is what I'm looking for. I said, Rob, it's not enough money. You got to look at this a different way. If you can make 3% a month, how long does it take to double your account? 2 years. 2 years to double your account if you make 3% a month. Think of it. Mutual funds, they're making 6-8% a year. 8% is the average for the last 50 years or so. Well, if you make 8% a year, how long does it take to get to 72? Is that 9? It takes 9 years to double your account. If you're making 8% a year and you continue to reinvest the profits back into your trades in your portfolio, it takes you 9 years to double that account. With my whopping 3% a month, I could double in 2 years. Is a naked put the same as a cash secured put? Naked means that I don't have anything. That naked means I'm uncovered. So I have nothing. If someone wants to put the stock to me, they're not forcing me to have something available to do that with. So in other words, with a naked put, I have to have the cash available. So if I decided on here, let's get crazy. Let's go look at Amazon. If I decided to sell an option on Amazon, and Amazon right now is trading at $3,000, right? So if I went ahead and let's get really nutty, right? On Amazon. So if on Amazon, I sold let's just use one that's closer. I sold a $3,000 option. They're going to pay me right now. It expires today. What I'm doing is I'm saying I believe that Amazon stays above $3,000 today. If it does, someone's going to pay me right now $6.75 right now for that. Well, if Amazon drops below 3,000 today at 4 o'clock, folks, Eastern, you need to come up with $3,000 per share. See, there's a rub. When you're selling an option that's naked, it's not cash secured, means you have the cash available. If your broker allows you to do these in a retirement account, then yes, it would have to be cash secured. You cannot sell naked in retirement accounts. You can if you have cash available or some other equity, some other position that would cover the cost or the margin for it and or the full cost. You would have to have the full $3,000 per share on Amazon. Now, Amazon is not the place that I normally sell naked puts on, and I'm trading since 1997. I don't recommend most people short or sell naked puts on a company of this size. But can you sell naked puts on an American Airlines, or can you sell them on here's a great one, SEAS, C's. Oh, let's do that again. Let's see. Now, the ones that are going to expire today are not going to help us much, right? We're not going to get anything normally for today. So if we go out next week, here's the rule. Look in this column here for Delta. Slide down until you find a 20 Delta. So I've got a 24. We're close enough. That option right now is trading at 40 cents by 70 cents. The mid is 55 cents. If I were to sell this position right now, I would go for the mid price. They're going to pay me 55 cents a share or $55 for one contract. And what I've just done is I've agreed, because I really like this stock, let's say, I've agreed that I'll buy the stock at $48 a share, even though it's trading at 50 and a half. And they're going to pay me 55 cents a share to do so. Right? I like doing these on lower price stocks, normally under $40. C's has recently gone up a little bit, which is SeaWorld. They recently had a nice move up as we're starting to see the recovery back from COVID, right? Can you sell puts on margin instead of cash? Absolutely. Sure. You just have to have that margin account. So yes. Let's see. Got it. Okay. If they had shorted it for years.
I have a question for you, Robert. I have a question for you.
Sure.
Professional traders, generally speaking, do they make their living buying or selling options?
So as a professional trader, you will find most of them are sellers, not buyers. And here's why. If you buy, let's look at a stock. If you buy a stock, what has to happen to make money? It needs to go up. When I sell this option, right now, if I sold this $48 put, the stock is trading at 50 and a half. If the stock stays at 50 and a half, I make money. If the stock goes up, I make money. If the stock goes down but stays above 50 and a half, 48, I make money. So you have a 2 out of 3 chance of being right, sometimes a 3 out of 3 chance of being right in the trade. So professional traders are more sellers than they are buyers. So I am a tremendous fan of trading on both sides of it, but my retirement portfolio, every bit of it is about selling strategies. They're called cash flow. This is about cash flow. It's building cash. What I use for my normal day trades, my swing trades, that is not my retirement account. Retirement is safety to me. These types of trades bring safety when you know what you're doing, right? And you need to learn how to analyze the chart. You need to be able to look at a stock and say, ooh, this is what I see it doing now, and being able to read that chart. Right? And we help you with some of that as well, right? That's what we do. We teach people how to trade, right? When you're doing a credit put spread on Amazon, do you like max of 30 delta? I prefer a 20 delta on my selling as a norm, but when I'm going to a company like an Amazon, I'm going to sell a 10 delta. I'm going to sell 10. Guys, keep one thing in mind. All right. If you really want to learn how to do this, as far as options go, I can help you. And here's what I will do. Write this down. And maybe you guys can drop it in the chat for me. Write down tradewithrob.com. Every week I send out 1, 2, 3, sometimes 5 days a week. We send out one candidate. And if you want to do it with stock, you can do it with stock as well. We send out one candidate a week, which is a video. It's free. There's no cost to it. You just get an email that will tell you that it's been uploaded. And you can go check that out. That video is going to show you where we're looking to get in, where our stop is if it goes against us, and where our target is if it moves in our direction. Some will be bullish, some will be bearish, which means for me, we're trading calls and puts, the two different option types that are available, right? So if you're interested in it, awesome. Go check it out. You can always come to WealthbuildersHQ.com and just learn more about what we do as well. I find you can get about 4-to-1 on about a 24 Delta, Brad said. Yeah, it all depends. But Brad, here's the thing. If you look at Delta, Delta tells me what? It says for every dollar the stock moves, the option will move X. So if I have a 24 Delta, well, actually, we're talking about selling here. Let's go and shift this over to a buying mode. It's easier to understand in buying mode, right? If I go ahead here, if I were buying this option, I'd be looking to buy something that had a little more open interest than we're actually seeing here. But for argument's sake, I would be looking for a 65 or higher delta, all right? And this on SeaWorld, right? This on Seas. So if I'm buying this, that 65 delta tells me for every dollar the stock moves, the option will move 65 cents. But when I am selling, my selling positions in most cases, like I do with my iron condors, have 10 delta, which means that tells me that there is a 10% chance of this option going against me come expiration date. So there's a lot of different ways you can read into delta, and dependent upon stock, obviously you'll do differently with Amazon than you will with Ford as far as delta goes. All right. Let's see. We got one or two more last questions as we wrap up here. Can you explain the expiration of a credit spread? When does it make sense? Explanation of a credit or debit spread. When does it make sense to do it? What's the best way to be effective? Tell you what, Quinn, why don't we make that next week's topic where we talk about credit spreads? Because I will not do it justice there's 2:30 now, in that short period of time. But let's make that next week's topic. I'll write that down for me. Spencer, I'm sure you can jot that down in the document there for us.
Credit and debit spreads and when it makes sense, written down.
Awesome.
All right. Robert Roy is the CEO of Wealth Builders HQ. The link is in the description of this video. Robert, always a pleasure. We have a good weekend. We'll see you next week.
Appreciate it. You as well. Take care, guys. See you soon.
Thanks a lot, man.